Okay guys, I'm back with this here weekly market forecast. It's a bit late today because we've had a bank holiday here in the UK, so I've been enjoying the sunshine today a bit. So it's around 9 o'clock Monday evening at the moment, but this is the weekly forecast. I've identified about 6 or 7 pairs that could have potential opportunities. So we're going to start with the Aussie Euro, the Aussie Dollar, Japanese Yen. So I've put a line on here. You can see that price made a couple of lows down here, and it's moving up, and it looks like it's just going to break this fractal here, and we've got a TK cross, a nice bullish TK cross. Now the future cloud is very flat, the top is very flat, so that indicates that price has not been moving very far. It's been ranging quite well, as we can see here. So really we want to break above this level, probably this level, probably this level here. Sorry about that, the sound went off for some reason. This level here, and we want to close above that level if possible, and then we could take a trade to the upside. It just worries me about this future cloud being flat on the top, so we just need to wait for this candle to close, and this is the 4 hour, so, and then we could probably trade to at least this point, which would be about 50 pips or so, and we could put a stop loss below this candle that breaks, or we could put it under the Tenkan-sen to give it a bit more of a chance. You can see we had this big rejection pin bar here, and now it looks like we're trying to break this level. So where that grey line is, if we close a bit above that, we can take a trade to the upside. Chiku's outside of price, so that's all good. So all the Ichimoku signals are good, and it's just this future cloud that worries me slightly. So we'll see if this closes above that level there. Okay, so we'll move on to the Pound USD. This is my favourite pair. Right, so it looks like we've got a Kumo breakout here, but I don't like that future cloud. There's very little going on with that future. It's just starting to slope up, as you can see there. But on here, I'll put a line on. We'll want to break above that level, and then we could take the Kumo breakout to the upside. We've got a TK cross below the cloud, which is not great, but you know, it's still you can see the Tenkan-sen and Kijun-sen are starting to point upwards, which is quite good, and you can see we're trying to break this level here. We went right up to the Kumo breakout, but it was a fake, so price pulled back down, and now we're attempting to break that level again, and Chico's above price. So other than that, there's nothing really in his way. If we can break above, we've got a fractal there. That's probably what's causing the problems. But basically, if we close above that, we've got a doji formed at the moment. So if we close above that, where my grey line is, we could take that to the upside and just put stop loss below. I'll put a line on for the stop loss. That'd be the stop loss there. So that'd be about, that's low, quite low, 20 pips stop loss. So it is quite low. I'd probably take it to about 25, 30 to be honest. 20 is a bit low for me. You need to give it room to move. So I'd probably do it a bit lower. So I'd probably, what is it? If it closes at 29.39, I'd probably put it at 29.10. Give it 30 pips. So I'd probably put it somewhere there. And take it to the upside. I mean, you know, 20s and not a very big stop loss, but it doesn't give it that much room. You know, I like to have 30 pips because you know, it can easily come back 20 pips before it takes off to the upside. So you know, it's all a matter of preference, really. But you know, as long as it's within your risk management, it's not so bad. So that's the Pound USD. So moving on to the Aussie USD. I've put a line on here. Again, we're just breaking over that. Really, we should have been in this trade probably at the close of that candle to the upside with stop loss just under the candle that breaks. So we were ranging here for quite a while. If you look back, we made a high there and we came back, made another high. So we might have quite a bit of difficulty getting above this level. We've got to get above that level, really. So, I mean, we could take the trade to the upside when we break that level. Because really, I mean, you can go back as far as you want with these fractals. I mean, there's going to be fractals in the way somewhere, but really we want to just focus on the most recent ones. And the most recent one is that one there. So we could have taken that trade at a close above that. So on that candle there, the last candle. So, you know, we're a bit too late, but not that, you know, you could still take the trade to the upside. But it may start going higher and then pull back, so we might get a second chance to get in anyway. In actual fact, let me just see how much this, how late we are. 50, we're about, yeah, it's not too bad. We're only about 10 pips too late, but it all depends on the risk, really. So if we get in here, could put stop loss below there. So it's about 30 at the moment, so it's not too bad, really. But because we missed it there, we might as well wait and see if that candle closes above this fractal then. This fractal that's a bit further back. See if we can get above that. And then take that trade to the upside. So that's the Aussie USD. As long as you're within your risk management, you know, you can take these. If it's slightly late, I take trades that are just slightly late, as long as it's not over sort of 15-20 pips. If it's 10 pips, if I'm 10 pips too late and my stop loss is still, you know, sort of 20-30ish, 40-50 maximum, then I don't mind, because we will have losing trades anyway. You know, somebody sent me a message saying how many losing trades do you have? But it's not about how many losing trades you have. It's about how big. It's about how big your loss is. You know, it's not. You could have, you know, 4 losing trades and still get one good winner. You know, if you lose 4 trades at 30 pips, that's 120 pips. And you get one good winner, and you could get, you know, 150, 200 pips. I mean, you know, hopefully you don't get 4 losers on the trot, but what I'm saying is, you know, it's not about how many how many losers you get. It's about how you control your risk and just make sure you don't lose. A lot of mistakes people make when they're trading is moving the stop loss. So if the stop loss is 30 pips and price comes back to near that stop loss, traders will start moving the stop loss away. The losing traders will. They'll start moving the stop loss to 40 and then 50, and then, you know, it just starts eating away at you, and before you know where you are, you're 100 pips in the red. And that'll take some getting back, because you could have your next trade could be the same. And then you've got to get 200 pips back. You know, and obviously, even though you can get 200 pips back, you're only going to get your money back. So we need to control that risk. And it plays with your mind, trading, because you think, well, I'll just move my stop loss 5 pips. I mean, I don't, but some people, some traders will think, oh, I'll just move it 5 pips and give it a chance, and then it moves that 5 pips, then it's another 5. Before you know where you are, it's at your 100 pip stop loss. So it's all about controlling that. Just let it take you out. You should have a technical stop loss. There's no point in putting a stop loss on if you're going to move it, because then it's not a stop loss, is it? You're putting that stop loss to say you want to be out at that level. And if we've got a technical stop loss like this, we're underneath that candle, and like it's trading, it does psychological, it does play with your mind, because price could come back and you think, well, I'll move my stop loss to below this candle then. But you don't want that. You make a decision. Your stop loss is there, 30, 40 pips. If it comes back, let it take you out. You want to be out. You don't want to be in. If it's coming back that far, it could come back another 50 or 100 pips. So the trade's void, basically, if it comes back that far. You're taking a trade on the close and the price action that you get. So if it does come back that far, you don't want to be in. You're not interested. So you want to be out. So there's no need to move stop losses. Never move your stop loss. Make the decision that, before you put the trade on, where your stop loss is, and let it take you out. You can always get back in later if you get the price action that you want. But when you move your stop loss, you see, that's not adequate price action to be in anyway. If we're bullish here and price pulls back and we get a big red candle and it's near your stop loss, why on earth would you move your stop loss? Because you've got a big red bearish candle, so you don't want to be in. And these are the things that cause a lot of traders to lose money. They move the stop loss. I've seen it myself. I've seen traders, and I've seen they start off with a stop loss that's 30, 40 pips, a great stop loss, and the price has moved all the way down, and by the time it's finished, they're 175 pips down, and then they're so disappointed that they're 175 pips down that they close the trade anyway. So the stop loss never ever comes into play. I've seen it myself. I see it, and you ask the traders about it, and that's what they're saying. Well, I thought I'll move it. Never move your stop loss. Never. So, like I say, it's not about how many losers you get. Even if we're only 50% correct, we don't know which way the market's going to go. Nobody does. We're just playing the probabilities. That's all we're doing. Playing probabilities, keeping the stop loss low. And, like I say, we don't know which way it's going to go. We're guessing, basically. But what we do know is that we're going to be out at a certain level. And if we're not out, and it goes our way, then we'll stay in. Let it, there's the old saying, let your profits run. That's what we do. And then trail the stop loss accordingly. Never move the stop loss in the opposite direction ever. So anyway, so moving on. That was the Aussie USD, Euro CAD. Now I put this one up because if we reach this level here, price has hit that level quite a few times. So my reckoning is if we hit that level and we get some price action, I'd probably go against the Ichimoku system on this one. And I wanted to show you this one to show you that I don't always follow Ichimoku, because this is a sort of a range. If it hits this level here, we could get some sort of price action here. If we get some price action, a big pin bar, something like that, or a bearish engulfing, we could take this to the downside and trade it to this level. So I'll put another line on. I'm not very good with putting lines on, you know. Not. I always think people know where I'm pointing with the mouse. So we could probably, if we get some price action here, we might get a big pin bar or a bearish engulfing. We could take it to the downside, counter trend, but it's a range really. So we trade the range, and this is how we trade a range. Okay, so different trading style on a range than it is to a trend. And the reason I'm saying that as well is because this big blue bullish candle here, it's I think it could be due for a pullback because of the length and the strength that it's moved up without any pullback. So I think it's due, and we're getting quite far away from Tenkan-sen and Kijun-sen. When we get far away from Tenkan-sen and Kijun-sen, I mean, some people say it's overbought, but and then other traders say there's no such thing as overbought and oversold, but there's overextended, and I think that's what this is. It's a bit overextended because it's we're quite away from Tenkan-sen and Kijun-sen, and you can see with this cloud here, we've been flat for a long time, and we've only just started changing colour to bullish. But I'd wait to see what happens at this level. And the way we trade this as well is different to a trend, because this looks like some sort of range. It's been ranging here, it's high there. Well, it's certainly not a trend. So it hit the high there and it's come back down and it started ranging slightly here, and now it's going back up to this level. So what we'd want to do is, because this is not a trend, this is how we trade the range. We want to wait for price to break that level there, where that grey line is, and then pull back, and then show us some price action. I can't draw anything on this chart, so it's a bit awkward, so I'm just trying to use my mouse really. But what we'd want to do is want to break, because we don't trade the break of this level on a range, because it could be false. It could go all the way up, trigger us in and everybody else, and then come back and take us out. So what we do is we wait for this level to be broken, and we wait for price to pull back to that level and then go to the upside. So we break, come back, and then to the upside. I'm going to try and get something for next time to draw things on this chart, something to draw with. So that's the Euro CAD, New Zealand dollar, US dollar. This looks like it's going to reach. It didn't bounce off Kijun-sen there, so this pair looks like it's going to reach this grey fractal level here, and then we could wait for some price action and trade it to the downside, even though we're above Kijun-sen and Tenkan-sen. Sometimes, we have to follow the price action. Price action is quicker than Ichimoku. Ichimoku is a lagging indicator. So it's even though the Kumo future, that's just a prediction of where price has been. So everything else is still lagging. So sometimes price action rules over the indicator, and in this particular circumstance, we've got two sort of major fractal levels here. So I think we could move to there, and then if we get price action, then we trade it to the downside. If we don't get any to the downside, we'd have to reevaluate it at that point and see what happens, because anything could happen then. So onto the CAD yen. I did take a trade on this one earlier in the week, and I just got a few pips out of it, that's all. I'll just see if I can find where I took the trade. Show you. This one here. Took it there. So we went high, we pulled back to that level, and I took the trade here. So I'll put my grey line, and I just got a few pips out of it. It went up about 25 pips. No, sorry, it went up about 30 pips. So I didn't get much out of it, and then it came back. So it was Friday evening as well, so I closed it. So now we're in no man's land. We don't know what's going to happen now. We may pull back to Kijun Sen and then go to the upside, but there's a lot of ranging, mini ranging sort of action here. So we really want to get above this level now, and then if we're going to trade it as a trend. So that's that CAD yen. New Zealand dollar CAD. This is another one that I've singled out because we're just about to hit Kijun Sen here. We have been trending to the downside. We've pulled back. We made a big pin bar there, which could have led us to think that we were going to go back down to the downside. Then we ranged for quite a while and did nothing, and now we've pulled back up to Kijun Sen. So now we just need to see what happens here at this Kijun Sen. And there's no fractals to bounce from, so we'll just see if this Kijun Sen holds, and if we get some price action here, we could probably take a trade to the downside. We have no idea which way price is going to go. Nobody has any idea. Price can go anyway. We need to limit that risk. That's the only thing. So, and we trade what we see. And at the moment, I'm seeing this near Kijun Sen. So I'll be keeping an eye on this, and if we get some price action, I'll be taking a trade to the downside. So that's about it. There's 7 pairs there that I've gone through. They're the pairs that I've looked at and thought, well, there might be some opportunities. So all the rest of the pairs I looked at and I didn't say anything. So I'm not going to talk about pairs where I don't see anything. All the rest of the pairs are just doing this sort of thing. Red, blue, red, small candles. Not breaking any fractals either way and messing about really. So we want to be in markets that move. So that's my weekly forecast. And I'll speak to you next time. Bye.